Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, April 21st, 2023. Before we jump into the charts, please click like if you would. Helps us out a great deal. And subscribe to the Wicked Stocks YouTube channel. That'll help you in being notified each and every time new content has been uploaded. We put out a stock pick earlier this week on YouTube on Enphase. We do daily Apple, daily Tesla. You'll be notified of all that if you become a Wicked Stocks YouTube subscriber. It doesn't cost you anything. And check out wickedstocks.com. I must say that daily analysis in the Triple Q, the SPY, 2 individual stock picks a week you never actually see. On Thursday, we put one out on Palo Alto Networks, testing significant price ceiling right now. You may check that out. You can have the weekly S&P 500, NASDAQ 100, the long bond ETF, the TLT, all of that for $47 a month with a 5-day money-back guarantee. So check out wickedstocks.com. Big sell-off on Thursday following weaker earnings. And I don't even really need to show this chart right now because we're not going to see 226.47 anytime soon. And by that, I mean probably between now and the end of May, as this market is still approaching long-term support that's actually been targeted for the last week and a half following a settlement below this channel structure. We got pretty sloppy here, but we closed below it about a week and a half ago, then indicating 154.71. This descending channel bottom still in play, still expected, and it is backed up, if you will, by 146.06, which is a classic 5/8 downside Fibonacci retracement from the January low against the February high. There is all kinds of stuff going on in that vicinity as we break into the 140s. We also have this former long-term channel structure, 140.37 to 148.77. But what I've done here in the lower right is I've combined 146.06 and 154.71. This is a range that you can see here, narrowing gradually. Yes, if we close below 154.71, that is a sign of continued weakness, but I'm not going to go with it, so to speak, because I just think there's so much going on down here. But if we do close below 146.06, then yes, this market is back on its heels. And honestly, I wouldn't be surprised to see something like this over the next few months. Vicious down cycle for Tesla. We'll talk a lot about that if that occurs, but I'm not expecting it. I think this is a respectable zone of support that can absorb selling not only through next week, but even through May, and from here we can recover nicely. And so let's get with the day itself. There is this descending channel bottom that I pointed out. I've reduced it to a minor point only. It was session containment, able to contain daily selling pressures for Thursday. It essentially behaved as such, but I'm really sort of making room for 154.71 today, given what played out on Thursday. If we break 159.82, let's put it that way, 154.71 in reach. You can see that backed up by 146.06. This is profit-taking territory. If you happen to go short over the last couple of weeks, we've had a couple of meaningful sell signals. I'm no longer even showing that long-term speed line we settled below earlier. So this is profit-taking territory, 154.71. If you bought the 150 out of the money puts, for instance, or 155 out of the money puts, testing 154.71 would be your sign to take at least some profits, if not all the profits. And from here, once we're testing the 146.06, 154.71 region, if you want to reach for 220 out of the money calls, then that don't expire for at least several months, if that is your time horizon, that would be not a bad play. I think that's actually a good play. So as we slip into the 154.71 area, if we do today, liquidate the puts that you may have acquired a few weeks ago and consider reaching for 220 out of the money calls that don't, I would go several months out. I don't think it'll take 3 months, but it could take every bit of 2 months before then presumably rallying back into the 220s, because that would be the play then longer term. So I think that kind of covers it to the downside. Once again, if we close below 146.06, this thing can unravel consistently back to this January low area over the next, 2 to 3 weeks, and even breaking the January low of around 100, as I recall. What was the January low? It was 101.81. That was the exact low. That would become a 2 to 3 week objective if we close below 146.06. So if you're still long those puts, then just hold them. back down into the low 100 area within several weeks. And if we close below 146.06, I know the put premium will be pumped up at this point. It's not the best environment, the volatility that we have right now. They're not the best environment for buying out of the money premium. But if we get the follow through to the downside that I would anticipate with a settlement below 146.06, it really doesn't matter. Those will continue to open up nicely. So you may consider buying 100 out of the money puts if we close below 146.06. And that is all I'm going to say to the downside, because I don't think that scenario is likely. I think Tesla can grow oversold in a big way in this vicinity, starting at 154.71. And so let's talk upside today. I'm going to go through the charts here and show essentially Thursday's high. This is a big gap lower opening, and it has actual pivot point qualities today. So 169.70 is a level that can contain intraday strength. We might top out there for the day. Below 169.70, this market remains heavy today, and I'm expecting a test of that 154.71 channel bottom. By the way, all the minor points, we struggle over them. They mean something. I guess to say that we struggle over them is a bit of a stretch, but we definitely spend our due diligence in determining what it has meaning in the local vicinity for aggressive day traders. And 159.82 is a classic case in point. That is a 2 to 3 week descending channel bottom. Under other circumstances, I might actually call that a 3-star weekly support level. But because of the 154.71 objective, in light of the gap lower, big sell-off on Thursday, I think you need to give this market breathing room. So breaking 159.82, once again, 154.71 in reach. But back to the upside today, if we push above 169.70, we can, a significant rally could unfold today into the 178.68 to 181.92 region. 178.68 is a new descending 1/3 speed line that is based on the February high against Thursday's low, which is the lowest the market has been since the February high. So that's a new speed line. It'll be recalculated for each new low. Right now, if we rally higher and we do not break Thursday's 160.56 low, the 178.68 descending speed line will remain in effect. It will remain sort of our ceiling through next week. If we push through 169.70, I do have 176.11. That is an obvious resistance area, but I'm just keeping it minor because I think if we push through 176.11, it won't have a lot of meaning in terms of upside follow through. We'll merely test 178.68, which is the start of a narrowing range with this channel top coming down, this new channel top at 181.82. This area narrowing gradually, dropping gradually is our ceiling through next week. We can top out here through next week and fall off again, fall off back to the channel bottom that I've been showing a lot here at 154.71. It's hard to put it all on one chart, but I will say again that if we happen to test this area over the next day or two, and it is potentially in reach above 169.70, which is Thursday's high, we could rally into this zone by the closing bell. That is an area to set shorts, whatever that means for you, in anticipation then of a possible fall back into that 154.71 area, which is dropping ever so gradually. If we were, over the next few days, to close above 181.92, we have a good low for the month of April, and I'm expecting then 206.05. There's a channel top up here within a week or two of closing above 181.92. So, if I were to isolate the day trade, I think I already have pretty well. Holding below Thursday's high of 169.70 will keep that 154.71 channel bottom in reach today, where we can bottom out. It's part of a big zone down to 146.06, able to contain selling through May, and from here we can, rally into later second quarter actually. But pushing through 161.70, I don't expect to see that today. Hold on a second. If we push through 161.70, we may well reach this 178.68 to 181.92 region. That is a day trade. 3 to 5 day swing trade. It's hard to isolate it right now with this volatility. I'm going to defer back more into the 1 to 2 week time frame. So if we happen to push into the 178.68 to 181.92 region, that is your 1 to 2 week, liquidating longs. If you happen to be long and setting a short back into the 146.06 to 154.71 region. If we close above 181.82, and that's not going to happen today, but if over the next few days we muster a settlement above this channel top, then everything shifts positive as we move through the rest of April, the following 1 to 2 weeks, then expecting to reach 206.05. And after this big sell-off and closing above 181.92, I wouldn't be surprised if over the following 3 to 5 weeks, we reach into that 226.47 area. Still a significant test for Tesla long-term, able to contain buying into later year, and an area we need to get up and over to call a good low for the year with bullish continuation then expected into later year. I think that pretty much summarizes. I hope that all made sense. Please check out wickedstocks.com. Please click like and subscribe. I'll be back Sunday afternoon with Monday's Tesla report. You have a great weekend.